Hey everyone, welcome back to Retirement Redefined. I'm Brad Gotto. We'll be joined by my co-host, as always, Carlson. In this episode, we are unpacking the key takeaways in the 2024 tax filing season, what we learned, what surprised us, and what you should be thinking about moving forward. Just because tax filing season is over does not mean that tax planning stops. So be sure to subscribe and tune in bi-weekly for timely insights that help you stay financially ahead. Hello, everybody. Welcome back to Retirement Redefined. I'm Brad Gotto, and here with me, I would say as always, but it's still fairly new, Miss Carlson. Thanks for being here, Carly.
Hi, Brad. Yeah, good to be here.
As we record this, tax season just got over, so the timing, I feel like the timing's pretty good. But congratulations, I just got to tell you for making it through at least the normal tax filing season.
Thanks. It does feel like a big day. In fact, Sunday, 2 days before the deadline, I woke up to our 4-year-old who ran into our room, jumped on my bed, and said, "Mom, 2 more days until tax day." And I thought, like, one, that's really sweet. And two, like, that's really sad that the 4-year-old knows when
Oh,
taxes are due. But
yeah,
in my
that's really
house,
funny.
the 4-year-old knows when taxes are due.
You made a comment a month ago, 2 months ago, or something like that when we were talking about this season of life, and somehow spring break came up, and you're like, "Yeah, as a CPA, I don't ever get to take spring break." I never thought about that before, but that's kind of sad.
It is pretty sad. We ended up taking the kids for a like day pass thing to Great Wolf Lodge one of the days of spring break. Like, let's throw something at you, to like make it better. So,
Oh man, I probably shouldn't say this on the podcast, but I, I'll say it very nicely. I do not like Great Wolf Lodge.
oh, that's okay. We both were, my husband and I both were pretty adamant. Like, I don't know if we're coming back here. Like, how
Yeah,
do we convince the kids not to come back here? We were
it is,
sure we don't
it is
ever
a
want to go
massive
back.
humanity. It's a massive humanity. It is bonkers. Anyway, so outside of that, Carly, how are you? What's new in your world?
Gosh, I think we're doing really well. This is always kind of a time of year to rest and reset. So it's good
Yeah.
to get to do the podcast. This is the like catch up time too. It's all the things at work that you pushed off in crunch time and all the things at home you push off. Um, but that feels good. It's kind of exciting. I always feel a little re-energized at the end. Um, you think it would be the opposite, like, oh, I'm just exhausted, but there's like this sense of like, oh, I get to do all these other things. I was so focused on filing taxes, and now we get to jump into all the other fun projects.
Awesome.
Yeah.
Very good. We are I'm just in the throes of we started baseball again. And so that's my life now for the next 3 to 4 months as we record this. Baseball is going. So in fact, my son is a freshman. My oldest is a freshman this year, high school baseball. He's on the freshman team and he's pitching tonight. So I'm kind of nervous about that. But that's just a lot of baseball.
Is
But
he nervous?
what's that?
Is he nervous or just you?
He's not showing it.
Okay.
Um, I don't think so. I don't think so. Like I don't know that like he doesn't get nervous for tests. Like I actually worry about him because he doesn't get nervous about things I feel like he should at least have some nerves about, you know?
Yes.
Uh he just everything's gonna be fine all the time. Like he's very aloof in that area of his life. So good question. With that being said, Carly, let's jump into the content for today. Taxes are, usually somewhere top of mind for most people because we just pay them all day, every day. Obviously, we have to reconcile with the government every single year, and we get a season in which we get to do that without some sort of exception or extension being done. April 15th is that deadline again, unless it falls on a goofy day sometimes. But generally speaking, it's April 15th this year. April 15th is now passed, and so looking in the rearview mirror, let's start there. Uh, you and I talked about this as we were preparing for the show. Just a couple of learnings that you and I have, being kind of the first year of working this closely together. You and I have done a lot of referral business back and forth over the last 3 to 4 years, but obviously now being in business together and all under the Fiat brand. Couple of points that I think our listeners, it's worth our listeners hearing. And the first one is not just the numbers. It's not just about the numbers. It's about the story is what I'm kind of calling this point. Carly, what in the world does that mean?
Yeah. I think what stood out to me, kind of looking back on this first tax season, of us like really working together and serving fiat wealth management families, is that you know historically, our clients were like healthcare small business, doctors, dentists, vets who own their own practices. And for most of them, they've got pretty even collections and profit in their businesses year over year, month over month. And a lot of our fiat wealth management families are working with fiat in a season of time where a lot of things are changing. They're retiring, maybe we're doing Roth conversions. There's like volatility in your income, in the amount of income, but also in the source of the income, the amount of withholding. And in those changes, like usually when we're looking at a return, we like to look at trends and say, okay, well, here's what happened last year, but let's compare that to the year before, maybe even the year
Yeah.
before that, and see what happened. And for our fiat wealth management clients, one of the things that really stood out to me was just that like those trends maybe like there isn't an even line to say here's our growth curve or a nice little trajectory because we have these big swings and changes in this period of life where people are retiring and changing their income sources. And so then not about the numbers and more about the story. What I kept coming back to was like we really needed to understand and learn all of these new clients, all of the families who are new to working with fiat tax, who had worked with fiat wealth management before. On the tax side, we really had to learn about you. We had to learn about what was going on in your life, in your business, in your work, in your retirement, what plans you had put in place with your advisor. And so our sense of like normal wasn't doing this kind of year over year comparison, but our sense of normal was what was all the planning that had been done in the year? What had you guys expected to owe in taxes? Where did we actually land? And then doing this kind of comparison. And our gut check was instead of using last year's return, our gut check was that check in with the advisor to make sure
Yeah.
that, yep, this is what we were expecting for the year.
Um, yeah. I mean, it's one of those things, Carly, when you kind of just let taxes happen to you,
Yes.
they tend to look the same year over year. At least they're more consistent because you're just kind of passively letting them
Mhm.
happen. When you're doing tax planning and trying to be proactive, efficient, find opportunities, things of that nature, you run a lot more possibility of there being significant change year over year. I think that's number one out of that.
Yeah.
Number two, I would say is, and this is a line I've used for years. And so if you've been around fiat at all or listened to the podcast in any meaningful way, you've probably heard me say this. If you think taxes are confusing in your working years, just wait till you retire.
Mm.
And trying to take a pile of money, turn it back into a paycheck, having that interact with your Social Security, interact with any pension payments, part-time income, Medicare premiums, investment income, things of that nature, it just gets very complicated. And especially you couple that with what I just talked about in point number one, which is we're trying to do planning and find efficiencies. And it's really important. It becomes even more important that the CPA and the advisor are on the same page to make sure that we're both tracking of what this year should look like, that we're not missing the correct estimated payments, that we're not going to have a penalty at year end, that we just don't have a huge surprise relative to what the bill is going to be, things of that nature.
Yeah. And I like what you said in terms of planning. And I think it's interesting because I think we highlight a lot in planning as this way to kind of strategize and minimize tax. And absolutely, but sometimes we're doing planning and we're planning for a Roth conversion where someone's going to pay more
Yeah.
tax this year.
Yeah.
And so to me, planning, yes, is great because it's an opportunity to make sure we've optimized someone's return. But it's also a way to make sure there are no surprises. And I don't think I've said this on a podcast before, but that's like a really big thing of mine. Like I don't mind telling a client that they owe tax if we planned for it. If it's a surprise, like if I have to call someone and say, "Hey, you're writing this big
Yeah.
check to the government that you didn't know you were going to have to write," like that one gives me heartburn.
Yeah.
Yeah.
Um, it's hitting me square in the eyes. We just literally had a conversation this morning with a client of ours where that's what happened. It was a lack of expectations set.
Hmm.
And particular clients not currently using fiat tax as an outside CPA, which is fine. We will work with those people. But just a lack of expectation of the type of planning that was getting done and what that was going to result in. So it's important when like if you're new to fiat on the wealth management side, or you're going to be new to fiat on the tax side, maybe you've been with wealth management side for 3 or 4 years or longer, but you're new to the tax side. It's just super important to understand that in that very first year, there's just a lot of communication that needs to happen to make sure that you and I are on the same page, right? that you running the tax side and me running the wealth management side, that as that boils down to the individual clients and your and I's employees that are helping make these things happen, that that communication is super key. I always knew it was super important, and I've always kind of preached,
Yeah.
from the pulpit of like, look, your advisor and your CPA need to be on the same page. But as you and I have now joined into business together, it has just illuminated that need all that much more. So that being said, we have a second point here that I want to get to, and that is I'm calling this extensions are not bad.
Yeah. Yeah.
So Carly, talk to me a little bit about that.
Yeah, I think that extensions have this kind of scary feel to them. I mean, we started this whole conversation saying like April 15th is tax day,
Yeah.
but that's not really true. You know, you can ask for more time.
Yeah.
And if you file an extension, you get 6 more months. Now, there are some rules around that. The government still wants its money by April 15th, but you have 6 more months to actually submit forms. And the beauty of that is that 6 more months means 6 more months for that collaboration that you were just describing.
Yep.
It allows that information sharing process to happen, not in the thick of tax season when the tax team has like no capacity and their schedule is booked back to back for 12 hours a day. Like it allows like a moment to pause to say, here's what's going on with this family, here's what's going on in their story, here's what we were expecting, and here's why. And then if numbers are different than that, to really sit and understand. And we had some families that were really nervous about filing an extension for the first time because they'd never done it before. And I think if you've been a business owner, you're probably really used to filing extensions because most businesses need extra time to gather information or time to fund retirement. But if
Yeah.
you've always been like a W-2 employee, you probably been able to file on time in the past. And in these years where there's a lot of change, it's more reason to say, let's take a breather. We can have
Yep.
the entire return done, we can have all the numbers in, but let's outside of tax season sit down and say, what are all of your questions? Did this land where we were expecting? And before we push the button, can we just confirm that that there are no surprises on this return? And in the middle of tax season, sometimes that like crunch time, you don't get the space to really do that in a thoughtful and meaningful way. The other kind of a fun and interesting statistic is that like audit risk actually goes down on returns that are on extension. And
Interesting.
I was kind of looking into that because I've heard the statistic everywhere and I was like, what is that? Is that just like the IRS just doesn't audit returns that are on extension? And over and over, what all of the like statisticians have come back to is that returns on extension have been prepared more thoughtfully and with more time put into them. And so they're more likely to be accurate. If they're less likely to be inaccurate, you're less likely to get notices or to get audited. So I think that in these years where you have big changes, and even if that change is like, hey, I'm just new to working with fiat, like I'm
Yeah.
new, all my assets have been moved over, and I maybe have new custodians. I'm trying to understand my new tax forms, new financial reporting, just a good space to say, let's look at that in depth outside of tax season before we actually push the button. So we can
Yeah.
know what your tax bill is going to be. We can kind of be ready with amounts
Yep.
and then push the button on the return itself outside of tax season.
I love it. And the hardest part of this is behavior, right? It's
Right.
people are
Yes.
creatures of habit. And if you've always filed by the 15th and you've never filed an extension, it can feel bad. It can feel wrong. It can feel like maybe the service you're getting isn't as good because you had to file extension. And none of that is necessarily true. In fact, it could end up being way better for you for all the reasons that you just described. There's no real reason to rush
Right.
necessarily, because at the end of the day, we just got to true up and we got to reconcile what's going on with the IRS. Maybe they owe you money, maybe you owe them money. If you're, I will tell you philosophically, if you're a client of Fiat and you're taking our planning and taking our advice, on the whole, you're gonna owe money
Sure.
because we're not trying to pay the IRS more than we owe them, only to get back the money that we overpaid with zero interest paid to us while they held that. So on the whole, you're going to owe money. Now, it's also important to understand that if you have an estimated balance due, you don't get to extend that.
Right.
So you can file you can extend the actual filing, but if it's assumed you're going to owe 40 grand, just making numbers up, you still got to make that payment. Now, there still might be an additional final reconciliation done at filing time. when you get that extra 6 months. But at the end of the day, this is becoming more and more popular for our families. And I just want everybody to hear it's okay. You can file an extension. It's not a bad thing to do. In fact, there's just a lot of positives that come out of that. What Carly was talking about, it reduces chances of audits, which I didn't know that. That blows my mind. It gives us more time to plan outside of, to your point, kind of that busy tax season when you're on the 8-lane superhighway and it's the middle of traffic time and you're trying to squeeze in another tax return. It gives you a little more time to do it, which is important. The last thing I'll say, and this is come up more this year than ever for our clients, is clients that have K1s.
Mm. Mm-hmm.
And it's just, you should just, if you have an investment that kicks off a K1, you should just assume you're filing an extension. I think that's just the safest way to do it because on the whole, well, and I don't want to misspeak, Carly, what is the deadline? So if you're owed a K1, the person that owes you, the business that owes you a K1, what is the date they have to get it to you by?
So business returns are due March 15th. Because the IRS wanted there to be a 1 month window between when the business returns filed and the K1's finished, and you then filing your personal return. But businesses can also file extensions. And like I just mentioned, there are lots of reasons why businesses file extensions. A big one is retirement plans, but sometimes it's just like, hey, they need more time to sit down with their accountant, do planning, all the things we just talked about for individuals. So they get 6 more months. And so I do have lots and lots of families and individual clients who file like it's like August or September because that's when that 6 month deadline hits on the K1. And so you just know, like, we're going to file in the summer.
So technically, if the person that owes you the K1 doesn't file an extension, they owe that to you by March 15th.
Correct.
If they choose to file an extension, they don't owe you the K1 until their extension is due. So it's entirely possible and quite likely, in my experience, that if you're due a K1, you should probably just assume you're going to be on extension. And so again, this comes down to expectations. You made the comment earlier. I'm okay with my clients owing money. I just don't want them not knowing that they owe money, and that there's clear expectations set. So really good point. I think it's going to become more and more commonplace, especially the more planning that we're doing on behalf of these families, the more moving parts, you throw dust in the air, just a good idea to give yourself a little extra time. And so a great learning there. I'm going to change the topic and look forward. Now that we're through the normal tax filing season, even though there's probably some listeners here that did get extensions filed, and now you know it's not bad. As we continue to look forward, there's a difference between filing and planning. The filing part is done for the vast majority of people, but now we have to look at the planning part, which never stops. And so 3 quick points on planning and things to be thinking about. The first one, Carly, that you and I discussed was to deliver your tax return to your financial advisor or make sure that whatever was filed and that information is handed off to your advisor. Can you talk about why that's important?
Yeah, when we look at planning, we are using that latest return as our baseline and our starting point for the next year. And there are lots of reasons. Some of it is because we have to make some assumptions about income year over year, but also like what you need to pay in estimated taxes is 100 or 110% of what you owed in taxes last year. So we want to look at that most recent filed return. And just having that shared information. And so if we need to constantly, all of your advisors need to have kind of the most up-to-date information in order to do a good job for you. And so if the last tax return they have on file is from 3 years ago, that it's not relevant anymore. Yeah. So just keeping current. And if you're a fiat client that works with us both on the wealth management and the tax side, we have mutual disclosure agreements in place so that we can share that information back and forth directly. And we do that so that we can have those planning discussions and make sure that they're meaningful because we're looking at, closer to real-time information as we're doing it.
Yeah, a couple practical things you said in there that I think are really important. Number one, if you're a person that has to pay quarterly estimates, and a lot of retirees do, right? Because you're not in a W-2 job anymore where they're just auto-deducting your taxes. It's important for us to know what the new quarterly estimates are. Because if you think about it, if you wait till April 15th to file or to pay the final bill, within 3 months, you have another estimate coming. Like it's not that long down the road. And so you don't, as an advisor, from my perspective, selfishly, if I don't get that information quickly and kind of help plan, because I'm the one helping you with your cash flow. And if your cash flow needs to change based on your tax estimates, that's important for me to know. And from my perspective, the faster we can kind of get the most recent baseline we have, which is last year, and then tweak what we know is going to change from last year to this year to build out a pro forma. It may not even just be quarterly estimates that we're concerned with or need to start thinking about or planning for. It could have to do with your overall investment allocation, your cash flow, and a lot of other things that just matter. So making sure that that data is transferred from one financial professional to the other one and making sure they're on the same team, same page, again, comes down to proper expectations from a planning perspective. So the second thing is volatile markets and how that can change your overall taxes. And here we sit in some fairly volatile markets. So important to talk about, timely to talk about. But why? Why does that matter? If markets are volatile from a tax perspective, why is it important to plan around that?
Well, we just said we're going to take last year's return and use it as our baseline for this year's planning. And we'll make tweaks and changes to things we know are going to change. Well, volatile markets can really change some things on your return. I mean, a big one, like what's your investment income doing? What's inside your portfolio? Maybe you had a bunch of capital gains last year and now we've got losses inside a portfolio. Or maybe we, took advantage of losses last year and now we need to figure out, like, are we just going to let that sit and we need to raise cash from another area because we're not
Yeah.
going to harvest more losses in the current year. So I think that's a big one. And then as we look at volatile markets and we talk about doing Roth conversions, a lot of times we plan and wait for Roth conversions at year end, but if markets are down, it might be a good opportunity to take advantage while the market's down to do that Roth conversion then, so that then as the market builds back up, you're getting tax-free gain inside your Roth account.
Yeah.
So just kind of the timing of when we do some of these transactions based on what's happening in the market can be really important.
Yeah, at the end of the day, it's just tax efficiency. You should pay your tax bills when they're the cheapest. And sometimes when the markets go down, although that makes your account value less, that's not great. It also makes the tax bill less.
Mm-hmm.
And so moving money from a tax perspective, we talk about the 3 tax buckets all the time, doing tax bucket audits, how much money is in pre, post, and free, pre-tax, post-tax, tax-free. And for your family, having the right amount of money in each bucket relative to the planning that you're trying to do, the cash flow that you need in retirement, the legacy you want to leave, stuff like that. And making sure that your tax plan is pointed to the outcomes that you're seeking. But then in these movements, like right now, finding opportunities, the market's on sale right now relative to what it was a month and a half ago. And so like everything else in normal life, Carly, if there's a certain blouse that you were looking at Target and you find out it is on sale, you got to run in there and take advantage of the sale before it expires. Everybody, unfortunately, has to pay taxes. So when they're on sale, we should probably take advantage of it, and volatile markets give us those opportunities with things like Roth conversions, with things like tax loss harvesting, the timing of an RMD payment, possibly. There's just a lot of different things that we need to be cognizant of, and you and I need to be on the same page about. So start planning around that now, because the markets are volatile right now. So make sure that your advisor has their most recent 1040, that they've got a plan in place of what's going to change in this year, and then looks for opportunities relative to these volatile markets to save you some money on taxes. The third point and the final point for this episode, Carly, is get to the front of the line. What in the world does that mean?
I think we do a lot of planning and kind of think about planning as a year-end activity.
Yeah.
And year-end also can be kind of crunch time between holidays and businesses being closed. Like there's a lot to get done at the end of the year. And so I like to think of planning as something that you start early in the year. We can put a plan together. We might not execute on all parts of that plan until year-end, but we're having those discussions about here's what we're going to do this year. And
Yep.
we know what the year is going to look like early on. And, on the wealth management side, you guys are doing your like May review meetings with your clients. And so you're starting that process in May. For our business owner clients, we do a lot of that in like June and July. So we call it summer planning. But same idea. Let's talk early in the year about how we think the year is going to go. And at year end, then we kind of do like a check-in. It's like a little checkpoint to say, okay, did we land where we thought we were going to land? Did we get everything done we said we were going to get done? And what's left at year end? Instead of trying to put a whole plan in place, build it, and then like drive it down the road all at year end. Too much.
Yeah. The analogy that keeps popping in my head is Black Friday. Is that what's called? The day after Thanksgiving?
Oh, yeah. Yeah.
Yeah. That's the shopping day, right? Like, don't do that. Like, the sales extend beyond Black Friday, even though the retailers don't want you to know that or believe that. They absolutely do. You don't need to go out there and run into the masses and deal with that chaos
Yes.
If you can control it, you should can control it. So there's no reason, one, of dealing with mass chaos and waiting to the end of the year when everybody else is trying to do the same thing. There's no other place in life that we love to do that. We don't purposely put ourselves in traffic. We don't purposely get to the end of the line at Disney World and wait 3 hours for a ride just because we love waiting in line or kind of being, in a queue, so to speak. When was the last time you called an organization and got immediately through, right? You always get put on hold.
Sure.
And nobody's ever thought, gosh, I wish I could be on hold longer. I wish that there was like 70 other people doing this at the exact same time as me so that I didn't get the attention that I deserve.
Yeah.
So don't do that. Like, we can have these conversations much earlier in the year. It's one of the reasons that we try to get together with all of our clients around May, right after tax season's over, to begin kind of the process of point number one and point number two, get us the most recent return, which of course, if you're working with both the tax and the wealth management side here at Fiat, is going to happen automatically, which is wonderful. Yeah. But point number two, we've got volatile markets right now. Let's have that conversation. And then point number three, let's start the planning process now. So when we get to the end of the year, yeah, maybe there's one or two things we need to do. But for the most part, the Christmas shopping is done. I'm not waiting till Black Friday to do all of this kind of stuff. I'm trying to make sure throughout the year we're finding deals and finding opportunities for your family. So really good point. Love that. And hopefully some of you take us up on that so that you're not scrambling at year end. Now, there are some things that have to wait till year end. There are some things that have to wait till Black Friday from a Christmas shopping standpoint. I get that. But there's a lot of boxes that we can probably check throughout the year. We try to do that as best as we can here at Fiat, whether you know we're doing it or not. But if you have anything, changes in your life, changes to your situation, things that we should be aware about, again, always better for us to know now than prior to November, December.
And I think even the maybe changes, right? Hey, I'm looking at maybe selling my house. Here's what we're thinking about, right? Those, the planning early in the year can be a little more hazy. And by year end, it can be really clear.
Yep.
And I think that's okay too. I think sometimes people are worried, well, I didn't know exactly what I was going to do yet, or I wasn't sure. I sold this business and I wasn't sure how much, I was going to get paid this year versus next year. So I just thought I'd wait till I knew the final numbers. And you're like, oh gosh.
I was just talking to a client that happened. They had sold a business and then they were talking to us about it. And I'm like, well, why didn't you say something to us ahead of time? And they're like, well, I didn't think it mattered until it was over. I didn't have the money. And in their head, they're like, well, you manage money. And so until I have I'm like, no.
Yeah.
There's so much that probably could have been or done or should have been done ahead of time to prepare for this. So great point. Carly, congratulations on making it through the formal part of tax season anyway. I know you've got a vacation coming up with your family, a well-deserved vacation. So enjoy that. And for the rest of you, thank you for being a part of another episode of Retirement Redefined. We'll see you all in a couple weeks.
Thank you for listening. Don't forget to click the subscribe button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views and opinions of Fiat Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.